ExamPrep.School. Texas Public Insurance Adjuster Exam, exam code InsTX-PbAdj17. There are 4 practice exams in this series. This video covers Practice Exam 1, which is free. In this video, we will be covering the following major categories for Practice Exam 1. General Property Insurance Product Knowledge. Insurance terms and related concepts. Policy provisions. Texas statutes and rules. Pertinent to public insurance adjusting. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following most accurately states the insuring agreement wording in the 165-line standard fire policy? A. We will pay for direct physical loss caused by fire or lightning only. B. We will indemnify the insured against direct loss or damage caused by fire or lightning. C. We insure against loss of property by fire, lightning, or removal. D. We will indemnify the insured for loss of or damage to property covered herein, caused by fire or lightning. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is D. The insuring agreement in the 165-line policy specifically states that the insurer will indemnify the insured for loss of or damage to property covered, herein caused by fire or lightning. This wording is the exact operative clause in the policy. Reason A is not correct. This choice replaces indemnify with pay and omits the scope phrase, altering the precise legal wording. Reason B is not correct. This option omits property covered herein and adjusts the sequence of terms, so it does not match the exact clause. Reason C is not correct. This includes removal coverage, which is not part of the insuring agreement language in the standard form. Question 2. Under the 165-line standard fire policy, the coverage. A limit of liability refers to which amount? A. The actual cash value of the damaged property at the time of loss. B. The full replacement cost of the covered building without deduction for depreciation. C. The agreed value declared in the policy declarations, regardless of actual loss. D. The amount stated on the policy declarations for the insured building. The correct answer is D. Coverage. A limit of liability under the standard fire policy is the amount specified in the declarations for the insured building, not actual cash value, replacement cost, or an agreed value. Reason A is not correct. Actual cash value is not used for coverage A under the standard form. Reason B is not correct. Replacement cost coverage is not provided under the basic standard fire policy without an endorsement. Reason C is not correct. Agreed value is a separate optional provision, not the basic coverage. I limit. Question 3. The concealment or fraud clause in the standard fire policy provides that in case of any concealment, misrepresentation, or fraud touching the policy, coverage is void. A. Only for claims related to the specific concealed loss. B. As to all coverage under the policy from its inception. C. Solely when the misrepresentation is discovered after a loss. D. Only if the insured acted with intent to deceive. The correct answer is B. The concealment or fraud clause voids the entire policy from inception if any material misrepresentation, concealment, or fraud occurs, not just the specific claim. Reason A is not correct. Coverage is not limited to specific claims. It is void as to the entire policy. Reason C is not correct. Voidance is triggered by the act itself, not by the timing of discovery. Reason D is not correct. Intent to deceive is not required. Any material misrepresentation or concealment suffices. Question 4. Under the standard fire policy, an insurable interest by the insured must exist at what time to recover for a loss? A. At the inception date of the policy. B. At the time of loss. C. at the time of policy renewal. D. At the time of submitting the proof of loss. The correct answer is B. For recovery under the standard fire policy, the insured must hold an insurable interest at the time of loss. Interest at other times is insufficient. Reason A is not correct. Interest at inception alone is not enough to recover after a loss. Reason C is not correct. Renewal timing is irrelevant to insurable interest requirements. Reason D is not correct. Proof of loss submission date does not determine insurable interest. Question 5. Which of the following outlines the correct sequence of steps in the appraisal process under the standard fire policy? A. Insurer unilaterally appoints an appraiser. Insured must accept its estimate or proceed to arbitration. B. Insured demands appraisal. Insurer issues payment based on its appraiser's estimate, and insured may then request umpire review. C. Insured and insurer each appoint an appraiser. The appointed appraisers select an umpire, and the umpire makes a binding decision if appraisers disagree. D. Insurer and insured jointly select a single appraiser, who then consults an umpire to finalize the amount. The correct answer is C. The appraisal clause requires each party to appoint an appraiser, those appraisers to choose an umpire, and any two of the three figures, the two appraisers or one appraiser and the umpire, to agree on the amount as binding. Reason A is not correct. The insurer may not unilaterally appoint an appraiser without the insured's selection. Reason B is not correct. The insurer cannot pay solely based on its appraiser's estimate before umpire selection. Reason D is not correct. Two separate appraisers, not a single joint appraiser, are required before selecting an umpire. Question 6. A commercial building insured under two concurrent fire policies, one with a $200,000 limit and the other with a $100,000 limit, suffers a $150,000 loss. Under the pro rata liability clause, how will the insurers allocate the loss? A. The insurer with the higher limit pays first, and the second insurer covers any remaining amount up to its limit. B. Each insurer pays a portion of the loss equal to its policy limit, divided by the combined limits. C. The loss is split equally between the two insurers, regardless of policy limits. D. Each insurer's payment is based on the time the policy was in effect during the loss period. The correct answer is B. The pro rata liability clause requires each insurer to contribute to the loss in proportion to its individual limit, relative to the sum of all concurrent policy limits. Reason A is not correct. Describing sequential payment rather than proportional sharing conflicts with the clause's requirement for simultaneous allocation based on limits. Reason C is not correct. An equal split ignores the relative size of each insurer's limit and contradicts the pro rata method. Reason D is not correct. Allocating by policy duration misinterprets the clause, which uses limits rather than time in force. Question 7. A warehouse has been unoccupied for 75 days when a fire causes significant damage. Under the vacancy provision of a standard fire policy, what is the insurer's likely response? A. The insurer denies coverage once the structure has been vacant for more than 30 days. B. The policy continues to cover the loss since the building is only unoccupied, not vacant. C. The insurer denies the claim because vacancy exceeding 60 days voids fire coverage. D. The insurer applies the vacancy clause only after 90 consecutive days of unoccupancy. The correct answer is C. Standard fire policies define vacancy as absence of substantial property and occupancy, less than 31% for more than 60 days, suspending coverage for fire losses after that period. Reason A is not correct. The vacancy threshold is set at 60 days, not 30 days. Reason B is not correct. Unoccupied differs from vacant. Vacancy provisions trigger after the specified period, even without occupants. Reason D is not correct. The vacancy clause activates after 60 days, not 90 days. Question 8. A lightning strike ignites the roof of a dwelling, causing the fire to spread inward. Under the definitions in a standard fire policy, this event is classified as what type of fire? A. Scorching. B. Friendly fire. C. Hostile fire. D. Smoldering. The correct answer is C. Hostile fire encompasses fires originating from external, uncontrolled sources such as lightning, distinguishing it from friendly fire, which begins in a controlled combustion chamber. Reason A is not correct. Scorching refers to damage without open flames and does not match the destructive spread described. Reason B is not correct. Friendly fire involves flame escapes from a controlled chamber, unlike a lightning-induced blaze. Reason D is not correct. Smoldering describes slow combustion without flame and is inconsistent with an active lightning-started fire. Question 9. Under an H03 policy, dwelling coverage is written on which peril basis? A. Named peril basis. B. Open peril basis. C. Broad peril basis. D. Specific peril basis. The correct answer is B. This option is correct because H03 policies ensure the dwelling against all perils, except those specifically excluded, which defines open peril coverage. Reason A is not correct. That choice is incorrect because named peril basis applies only when coverage is limited to explicitly listed perils, which is not the case for dwelling in an H03. Reason C is not correct. That choice is incorrect because broad peril is not a standard term. Dwelling coverage under H03 is broader than broad peril coverage. Reason D is not correct. That choice is incorrect because specific peril is not used in standard homeowners policies. H03 uses open peril terminology. Question 10. Which of the following perils is not covered under the personal property section of an H03 policy? A. Theft. B. Flood. C. Fire or lightning. D. Explosion. The correct answer is B. This option is correct because flood damage is specifically excluded under the named peril coverage for personal property in an H03 policy. Reason A is not correct. That choice is incorrect because theft is one of the named perils covered for personal property in an H03. Reason C is not correct. That choice is incorrect because fire and lightning are classic named perils included in personal property coverage. Reason D is not correct. That choice is incorrect because explosion is among the named perils for personal property under H03. Question 11. Under an H03 policy, what is the special limit of liability for theft of jewelry? A. $1,000. B. $1,500. C. $2,500. D. $500. The correct answer is B. This option is correct because H03 policies impose a $1,500 special limit for theft losses to jewelry, watches, and furs. Reason A is not correct. That choice is incorrect because $1,000 is below the standard special limit for jewelry theft. Reason C is not correct. That choice is incorrect because $2,500 applies to silverware under special limits, not jewelry. Reason D is not correct. That choice is incorrect because $500 is too low relative to the established special limit for jewelry theft. Question 12. In an H02 policy, coverage D, loss of use, is typically limited to what percent of coverage? A. Dwelling. A. 10%. B. 30%. C. 50%. D. 70%. The correct answer is B. This option is correct because HO2 policies commonly set coverage D for loss of use at 30% of the coverage A limit. Reason A is not correct. That choice is incorrect because 10% is the typical percentage for personal property coverage, not loss of use. Reason C is not correct. That choice is incorrect because 50% exceeds the standard allocation for loss of use under HO2. Reason D is not correct. That choice is incorrect because 70% is well above the typical loss of use percentage. Question 13. A standard earthquake endorsement attached to a homeowner's policy usually includes a waiting period of how many hours before a loss is covered? A. 24 hours. B. 48 hours. C. 72 hours. D. 96 hours. The correct answer is C. This option is correct because most standard earthquake endorsements impose a 72-hour waiting period between seismic events before coverage applies. Reason A is not correct. That choice is incorrect because 24 hours is shorter than the industry standard waiting period. Reason B is not correct. That choice is incorrect because 48 hours does not align with the common earthquake endorsement clause. Reason D is not correct. That choice is incorrect because 96 hours exceeds the typical waiting period for earthquake coverage. Question 14. The Inflation Guard endorsement on an HO3 policy adjusts coverage limits based on which of the following indices? A. Consumer Price Index. B. Producer Price Index. C. Standard & Poor's 500 Index. D. Consumer Confidence Index. The correct answer is A. This option is correct because the Inflation Guard endorsement uses the Consumer Price Index to periodically adjust dwelling and other coverage limits for inflation. Reason B is not correct. That choice is incorrect because the Producer Price Index is not used for consumer-level policy adjustments. Reason C is not correct. That choice is incorrect because a stock market index is unrelated to property insurance inflation guards. Reason D is not correct. That choice is incorrect because consumer confidence metrics do not determine coverage limit adjustments. Question 15. Which coverage is provided under an HO3 policy but is not available in a DP3 dwelling policy? A. Personal liability protection. B. Named peril coverage for personal property. C. Additional living expense coverage. D. Replacement cost valuation on the dwelling. The correct answer is A. This option is correct because HO3 includes Section 2, liability coverage for personal liability, whereas DP3 policies do not include liability protection. Reason B is not correct. That choice is incorrect because DP3 policies include named peril coverage for personal property as part of their Section 1. Reason C is not correct. That choice is incorrect because DP3 provides coverage for additional living expenses under Coverage E. Reason D is not correct. That choice is incorrect because DP3 typically provides replacement cost valuation for the dwelling under Coverage A. Question 16. A homeowner has a Coverage C limit of $100,000 on their HO3 policy. While traveling, jewelry worth $15,000 is stolen from a hotel room. How much will the insurer pay for the loss under Coverage C off-premises property protection? A. $10,000. B. $15,000. C. $1,000. D. $100,000. The correct answer is A. The correct answer is based on the standard off-premises property sublimit of 10% of Coverage C, which equals $10,000 in this case. Reason B is not correct. Pays the full loss amount, but the off-premises sublimit caps recovery below the actual loss. Reason C is not correct. The $1,000 amount reflects a per-item cap under certain endorsements, not the standard off-premises limit. Reason D is not correct. The full coverage C limit applies on premises, not off premises with the standard sublimit. Question 17. A policyholder seeks the personal property replacement cost endorsement. Which dwelling qualifies for this endorsement under a standard homeowner's policy? A. A primary residence owned and occupied by the insured. B. A seasonal vacation home used less than 90 days per year. C. A tenant-occupied condominium unit. D. A secondary residence occupied fewer than 30 days annually. The correct answer is A. The correct answer is that the endorsement requires the dwelling to be the insured's owner-occupied primary residence at the time of loss. Reason B is not correct. Seasonal vacation homes are not eligible because they are not primary owner-occupied dwellings. Reason C is not correct. Tenant-occupied units do not meet the owner-occupancy requirement for this endorsement. Reason D is not correct. Secondary residences are not eligible regardless of the duration of occupancy. Question 18. After heavy rainfall, a homeowner's sewer line backed up into the basement, and the sump pump failed, flooding the area. The policy includes a water backup and sump overflow endorsement. Which damage is covered? A. Flooding from rising river water. B. Structural damage due to pump motor burnout. C. Storm-driven groundwater seepage. D. Backup of sewage through drains and sump overflow. The correct answer is D. The correct answer is that the endorsement specifically covers water or sewage, backing up through sewers or drains and overflow from a sump system. Reason A is not correct. Flooding from external bodies of water is excluded under this endorsement. Reason B is not correct. Mechanical breakdown of the pump is not covered by this endorsement. Reason C is not correct. Storm-driven groundwater seepage is treated as flood, not sewer backup. Question 19. A fire destroys a home. The policy has an ordinance or law increased cost of construction endorsement with a $10,000 limit. Code upgrades require an extra $15,000 in construction costs. How much will the endorsement pay? A. $10,000. B. $5,000. C. The full $15,000 cost increase. D. No coverage unless a full code coverage endorsement exists. The correct answer is A. The correct answer is the endorsement limit of $10,000, which caps reimbursement for increased code upgrade costs. Reason B is not correct. Pays only the difference below the limit rather than the full endorsement amount. Reason C is not correct. The endorsement limit caps payment below the actual code upgrade cost. Reason D is not correct. The endorsement already provides code coverage up to its limit. Question 20. A valuable painting scheduled on a homeowner's policy for $5,000 is stolen. Its current market value is $8,000. How much will the insurer pay under the scheduled personal property endorsement? A. $8,000 market value. B. Replacement cost up to policy limit. C. Actual cash value of the painting. D. $5,000 scheduled amount. The correct answer is D. The correct answer is the scheduled amount of $5,000 since scheduled items are paid at their agreed value, regardless of current market price. Reason A is not correct. Scheduled endorsements pay the agreed amount, not the current market value. Reason B is not correct. Replacement cost coverage is not provided by a scheduled personal property endorsement. Reason C is not correct. Actual cash value applies only to unscheduled personal property. Question 21. Under the coinsurance clause of the building and personal property coverage form, how is the insurer's payment for a partial loss calculated when the insured carries less insurance than required? A. Amount of insurance carried, amount of insurance required, multiplied by loss amount, deductible. B. Loss amount, depreciation, multiplied by amount of insurance carried, amount of insurance required, C. Loss amount, deductible. D. Replacement cost, policy limit. The correct answer is A. The coinsurance clause requires a proportional reduction of payment. The insurer multiplies the loss by the ratio of carried to required insurance, then subtracts the deductible. Reason B is not correct. This formula wrongly factors in depreciation and misplaces the deductible within the ratio calculation. Reason C is not correct. This ignores the coinsurance penalty and applies no proportional reduction for underinsurance. Reason D is not correct. This subtracts the policy limit from replacement cost, which does not reflect the coinsurance penalty. Question 22. Under the Building and Personal Property Coverage form, which set lists exactly the three broad classifications of covered property? A. Building. Business personal property of others. B. Land inventory accounts receivable. C. Fixtures, machinery, equipment. D. Stock, money, transportation costs. The correct answer is A. The form covers three main classes: the building and structures, business personal property owned by the insured, and personal property of others in the insured's care, custody, or control. Reason B is not correct. Accounts receivable and land are specifically excluded under the form and not part of the three main classes. Reason C is not correct. Fixtures, machinery, and equipment are subcategories of building or business personal property, not a separate trio. Reason D is not correct. Money is excluded and transportation costs are a coverage extension, so this set is incorrect. Question 23. Which peril is specifically excluded under the causes of law special form in commercial property coverage? A. Continuous or repeated leakage of water from a plumbing system. B. Aircraft collision with the building. C. Explosion of boilers or pressure vessels. D. Hail damage to roof structures. The correct answer is A. The special form excludes losses caused by continuous or repeated water leakage from plumbing, heating, or air conditioning systems unless a sudden accidental discharge occurs. Reason B is not correct. Aircraft collision is a listed covered peril under the special form, not an exclusion. Reason C is not correct. Boiler or pressure vessel explosion is a covered peril under the special form. Reason D is not correct. Hail damage is a covered peril under the special form and not excluded. Question 24. Under the business income with extra expense coverage form, coverage is triggered by which event? A. Direct physical loss or damage by a covered peril to property at the insured premises. B. A suspension of operations by civil authority without property damage. C. Equipment breakdown losses at any location. D. Loss of market during a supply interruption. The correct answer is A. This form begins coverage when covered perils directly damage property at the described premises. Other causes like civil authority orders without damage are additional coverages or excluded. Reason B is not correct. Civil authority suspensions without property damage are an additional coverage, not the primary trigger. Reason C is not correct. Equipment breakdown is covered under a separate equipment breakdown form, not the BI with extra expense form. Reason D is not correct. Loss of market is not a covered cause under this form. Question 25. Under the business income coverage form, the civil authority additional coverage period ACE extends coverage for up to how many weeks after a covered loss? A. 4. B. 2. C. 6. D. 8. The correct answer is A. The form provides up to 4 consecutive weeks of civil authority coverage following direct damage by a covered peril that blocks access. Reason B is not correct. 2 weeks is shorter than the 4-week maximum provided by the form. Reason C is not correct. 6 weeks exceeds the 4-week limit of civil authority coverage under the form. Reason D is not correct. 8 weeks is beyond the coverage period specified, which is limited to 4 weeks. Question 26. Which coverage part of the ordinance or law coverage endorsement, CP 0405, reimburses the insured for the increased cost of construction required by an ordinance or law? A. Coverage A, loss to the undamaged portion of the building. B. Coverage D, temporary relocation expenses. C. Coverage C, demolition and debris removal. D. Coverage B, increased cost of construction. The correct answer is D. Coverage B under the endorsement specifically pays for the extra expense to comply with ordinances or laws that regulate construction, repair, or demolition. Reason A is not correct. Coverage A covers loss to undamaged parts, not increased construction costs. Reason B is not correct. Temporary relocation expenses are not a part of this ordinance or law coverage endorsement. Reason C is not correct. Debris removal is not addressed under this endorsement's coverage parts. Question 27. The Inflation Guard Optional Coverage Endorsement, CP 0409, automatically increases the limit of insurance on which basis? A. Monthly pro rata adjustment. B. Annual anniversary date revision. C. Quarterly scheduled increments. D. Adjustment at time of loss. The correct answer is A. This endorsement provides a continuous pro rata increase of limits on a monthly basis to account for inflation over the policy period. Reason B is not correct. Limit changes at renewal rather than continuously on an annual basis under this endorsement. Reason C is not correct. No quarterly schedule is used, the adjustment is monthly. Reason D is not correct. Adjustments occur throughout the policy term, not only at the time of loss. Question 28. A catering company insured under a commercial property policy added the peak season endorsement, CP 1230, with a 25% seasonal increase limit. Their normal stock limit is $200,000. In mid-December, inventory peaks at $260,000 due to holiday demand. Under this endorsement, how much coverage applies to the excess stock? A. No excess coverage. Policy limit remains $200,000 regardless of season. B. Inventory over $225,000 is covered only if reported within 30 days after peak. C. Seasonal stock is covered but subject to a separate deductible equal to 10% of the excess. D. Up to $50,000 of additional coverage for the seasonal stock increase. The correct answer is D. The peak season endorsement automatically increases the policy limit by the agreed percentage. 25% of $200,000 equals $50,000 during the designated period. No separate deductible or reporting condition applies to that endorsed increase. Reason A is not correct. The endorsement does increase the limit for seasonal stock, so coverage is not capped at the base limit. Reason B is not correct. Once in effect, the increase applies automatically during the period without later reporting requirements. Reason C is not correct. There is no separate deductible applied to the seasonal increase under this endorsement. Question 29. A cold storage facility suffered a power outage that disabled its refrigeration compressor. Perishable inventory spoiled before backup power activated. Under the spoilage coverage form, CP 0440, which loss is covered? A. Spoilage due to contamination by refrigerant gas after compressor failure. B. Loss caused by spoilage from temperature change due to ordinance enforcement. C. Financial loss from delayed sale because of power interruption. D. Direct loss from mechanical breakdown of the refrigeration unit. The correct answer is D. The form specifically covers direct physical loss from mechanical or electrical breakdown of refrigeration equipment. Contamination and ordinance-related losses are excluded, and delayed sale losses aren't covered. Reason A is not correct. Contamination by refrigerant gas is excluded. Only mechanical breakdown itself is covered. Reason B is not correct. Losses from government-mandated shutdowns or ordinance changes aren't covered. Reason C is not correct. Economic losses due to delayed sale aren't included in spoilage coverage. Question 30. A tenant accidentally breaks a landlord's storefront window under a commercial property policy with a legal liability coverage form. The window's replacement cost is $8,000, but its actual cash value at loss is $5,000. How will the insurer value this legal liability loss? A. Actual cash value at time of loss. B. Replacement cost without depreciation. C. Agreed value listed in the declarations. D. Cost to repair plus net rental income lost. The correct answer is A. The legal liability coverage form pays the actual cash value of the damaged property that the insured is legally liable to repair or replace, applying depreciation. Reason B is not correct. Replacement cost coverage is not provided under this form. Reason C is not correct. There is no agreed value provision in the legal liability form. Reason D is not correct. The form does not cover lost rental income or combine repairs with income loss. Question 31. A commercial building has been vacant for 75 days when vandals break windows and damage plumbing, causing water leaks. Under the commercial property conditions form vacancy provision, which loss remains covered? A. Vandalism damage to exterior glass. B. Water damage from plumbing leaks. C. Loss due to hidden sprinkler leakage. D. Fire damage originating inside the building. The correct answer is D. After 60 days of vacancy, losses from vandalism, glass breakage, and sprinkler leakage are excluded. Fire damage remains covered unless otherwise excluded. Reason A is not correct. Glass breakage by vandalism is excluded after the vacancy period. Reason B is not correct. Water damage from plumbing leaks is treated like sprinkler leakage and is excluded. Reason C is not correct. Sprinkler or plumbing leakage losses are excluded after the defined vacancy period. Question 32. A retail store added the protective safeguards endorsement requiring a monitored sprinkler supervisory alarm. The alarm signal was disconnected for 3 days without insurer notification, and a small fire occurred. Under this endorsement, what is the insurer's right regarding the loss? A. Deny the fire claim due to failure to notify impairment. B. Apply a sublimit of $5,000 for fire losses during impairment. C. Pay the full claim but increase the deductible by 50%. D. Cover the loss only if the impairment was due to scheduled maintenance. The correct answer is A. The endorsement requires prompt notification of any impairment. Failure to do so constitutes a breach that allows the insurer to deny coverage for losses during that period. Reason B is not correct. There is no sublimit provision. The endorsement allows denial rather than partial payment. Reason C is not correct. No deductible increase is specified in this endorsement. Reason D is not correct. Coverage isn't conditional on maintenance context. Any unnotified impairment voids coverage. Question 33. In the process of scheduling items under a personal articles floater, which of these pieces of information must be provided for each scheduled item? A. Serial number of the item only. B. Blanket category description without specifics. C. Photographic evidence of the item only. D. Detailed description, acquisition date, appraised value, and owner's name. The correct answer is D. The correct answer is the detailed description, acquisition date, appraised value, and owner's name because a personal articles floater requires specific data for each scheduled item to establish coverage and value. Reason A is not correct. Providing only a serial number is insufficient since the insurer needs full identification and valuation details. Reason B is not correct. Blanket descriptions lack the individual valuation needed to set limits for each item. Reason C is not correct. Photographs alone do not establish acquisition date or value, which are needed for scheduling. Question 34. Which of the following property types would be eligible for coverage under an installation floater? A. Completed warehouse racks already in service. B. Contractors' hand tools used daily at the site. C. Raw materials stored at the manufacturer's facility. D. Machinery in transit to a job site awaiting installation. The correct answer is D. The correct answer is machinery in transit awaiting installation, because installation floaters cover property destined for installation at a specific location, including transit exposure. Reason A is not correct. Completed and operational racks are not part of property awaiting installation. Reason B is not correct. Hand tools are not specified installation property and are typically covered under other policies. Reason C is not correct. Raw materials at the manufacturer are not yet designated for installation at the insured location. Question 35. Under the abandonment condition of a contractor's equipment floater, if property is declared a total loss, the insurer may A. Charge an extra handling fee for salvage removal. B. Retain the salvage property for its disposal or sale. C. Require the insured to destroy the damaged equipment on site. D. Automatically repair the property regardless of cost. The correct answer is B. The correct answer is retaining salvage because the abandonment condition grants the insurer title to salvaged property after paying a total loss, allowing disposal or sale. Reason A is not correct. No additional fee is charged. The insurer simply acquires salvage ownership. Reason C is not correct. The insurer does not require destruction. It holds the salvage for disposal. Reason D is not correct. Automatic repair is unrelated to the abandonment provision, which addresses salvage ownership. Question 36. Coverage under a trip transit policy terminates upon which of these events? A. Specified transit time period expires. B. Shipment arrives at the named destination. C. Completion of customs inspection at port. D. Issuance of a warehouse receipt. The correct answer is B. The correct answer is arrival at the named destination, because trip transit policies end coverage when goods reach the agreed delivery point and ownership passes. Reason A is not correct. Trip transit policies do not terminate based on time limits. They focus on specific voyage completion. Reason C is not correct. Customs clearance is not an event that automatically ends trip transit coverage. Reason D is not correct. A warehouse receipt does not signify the end of transit under such policies. Question 37. Riverbend Storage, a public warehouse operator, stored client-owned electronics when a sprinkler malfunction caused water damage. Under the warehouse legal liability coverages insuring agreement, which loss is covered? A. Damage to the warehouse building's structural elements. B. Replacement cost of the warehouse operator's own computer systems. C. Loss to client-owned electronics while in care, custody, or control. D. Lost business income due to warehouse closure after the incident. The correct answer is C. The insuring agreement covers the insured's legal liability for physical damage to goods of others in the insured's care, custody, or control, such as client-owned electronics stored at the warehouse. Reason A is not correct. The coverage does not insure physical damage to the warehouse structure, only liability for goods of others. Reason B is not correct. The coverage excludes property owned by the insured, such as the operator's own computer systems. Reason D is not correct. Business income losses are not covered under the warehouse legal liability insuring agreement. Question 38. Coastal Carriers transports goods by rail to a port, stores them at a marine terminal pending shipment, and then ships them overseas. Under the nationwide marine definition statement, which phase is considered a marine risk eligible for marine insurance coverage? A. Rail transportation from the factory to the port. B. Assembly of goods at the manufacturer's facility. C. Local truck delivery from the port to the consignee. D. Storage at the marine terminal awaiting vessel loading. The correct answer is D. The nationwide marine definition includes goods stored at a marine terminal, awaiting loading or unloading as part of the marine risk eligible for marine insurance. Reason A is not correct. Land-only rail transport before a marine port is not covered unless specified under a separate inland policy. Reason B is not correct. Manufacturing operations are not part of the marine risk definition. Reason C is not correct. Post-shipment local delivery after unloading falls outside the marine risk definition. Question 39. The vessel Sequest is insured under an ocean marine hull policy with a valued policy feature that specifies an agreed value. The hull suffers a constructive total loss due to irreparable hull damage. Under this valued feature, how is the loss settled by the insurer? A. Payment of the agreed value stated in the policy without deductions. B. Actual cash value minus depreciation and salvage recovery. C. Cost to repair the hull to its pre-loss condition. D. Agreed value reduced by a percentage for wear and tear. The correct answer is A. A valued policy feature obligates the insurer to pay the agreed policy value in the event of a total loss without deduction for a depreciation or salvage. Reason B is not correct. Actual cash value methods apply to open cargo policies, not valued hull policies with agreed values. Reason C is not correct. Repair costs are irrelevant in a total loss under a valued policy. Reason D is not correct. Wear and tear deductions are not applied when a valued policy feature establishes an agreed value. Question 40. Under a standard business income coverage form, which event will end the period of restoration? A. The date the policy was originally issued. B. The date the insurer makes the loss payment to the insured. C. The date the insured submits the proof of loss form. D. The date when the property should be repaired, rebuilt, or replaced with reasonable speed. The correct answer is D. The period of restoration ends on the earliest date the damaged property can be repaired, rebuilt, or replaced with reasonable speed according to the policy definition. Reason A is not correct. The policy issue date is unrelated to the restoration period. Reason B is not correct. Loss payment timing does not determine the restoration period. Reason C is not correct. Submission of proof of loss does not end the period of restoration. Question 41. Under an ISO ordinance or law endorsement, coverage B provides coverage for which of the following? A. The reduction in value of the undamaged portion of a building that must be demolished. B. The cost to demolish and clear the undamaged portion of a building to comply with ordinance. C. The increased cost to rebuild or repair to current code requirements. D. The additional property tax assessments due to reconstruction. The correct answer is B. Coverage B specifically covers the cost to demolish and clear undamaged portions of a building when required by ordinance or law. Reason A is not correct. That describes the loss in value of the undamaged portion, which is coverage A. Reason C is not correct. Increased rebuilding costs fall under coverage C, not coverage B. Reason D is not correct. Additional tax assessments are not covered under any ordinance or law coverage part. Question 42. Under the civil authority additional coverage in a commercial property policy, coverage applies for how long after the 72-hour waiting period? A. 7 days. B. 30 days. C. 14 days. D. 60 days. The correct answer is C. Civil authority coverage begins after the 72-hour waiting period and continues for up to 14 days from the date of the governmental order. Reason A is not correct. Coverage duration is longer than 7 days under standard forms. Reason B is not correct. 30 days exceeds the typical 14-day limit in the ISO form. Reason D is not correct. 60 days is not provided under the civil authority additional coverage. Question 43. Which event triggers extra expense coverage under a commercial property policy? A. A voluntary suspension of operations to reduce operating costs. B. A governmental order restricting access to the insured premises. C. Direct physical loss or damage at the described premises causing suspension of operations. D. Termination of the policy due to non-payment of premium. The correct answer is C. Extra expense coverage is triggered by direct physical loss or damage at the described premises that causes an insured suspension of operations. Reason A is not correct. Voluntary suspensions unrelated to physical loss do not trigger this coverage. Reason B is not correct. Civil authority orders trigger a different additional coverage, not extra expense. Reason D is not correct. Policy termination does not trigger extra expense coverage. Question 44. Aerosmith Manufacturing has a contingent business income endorsement on its property policy listing supplier, multiplied by and supplier Y. Supplier Z experiences a fire at its facility, causing Aerosmith to lose production for several days. Under the endorsement, which of the following describes how Aerosmith's business income loss is treated? A. The loss is covered because any third-party supplier interruption qualifies under the endorsement. B. The loss is covered only if the affected supplier is specifically scheduled in the endorsement. C. The loss is covered if the insurer grants civil authority closure of Aerosmith's customer sites. D. The loss is covered provided Aerosmith cannot source alternate suppliers during the indemnity period. The correct answer is B. The endorsement applies solely to interruptions caused by suppliers that are specifically named in the schedule, so losses from supplier Z are not covered unless supplier Z was listed. Reason A is not correct. This suggests coverage for any supplier, but the coverage is limited to scheduled suppliers only. Reason C is not correct. Civil authority provisions relate to direct property damage at the insured's premises, not contingent business income. Reason D is not correct. Alternate sourcing affects mitigation but does not expand coverage to suppliers not scheduled. Question 45. Plato's Pizzeria carries a utility service time element endorsement subject to a 50-mile radius and a 24-hour waiting period. A covered windstorm damages a power substation 60 miles away, interrupting the pizzeria's electricity for 10 hours. Under the endorsement, is the pizzeria's business income loss covered? A. No, because the interruption did not exceed the 24-hour waiting period. B. No, because the power substation is located beyond the endorsement's radius. C. Yes, because windstorm is a covered peril under the endorsement. D. Yes, since direct damage to any utility provider qualifies regardless of distance. The correct answer is B. The endorsement only covers utility interruptions caused by covered perils occurring within the specified radius, so damage beyond 50 miles is excluded. Reason A is not correct. This presumes the waiting period applies, but the primary exclusion here is distance beyond the radius. Reason C is not correct. While windstorm is a covered peril, the location requirement within the radius is not met. Reason D is not correct. Coverage is limited by both peril and geographic radius, so distance still matters. Question 46. Which statement best defines the principle of indemnity in insurance? A. Requirement for the insured to repay premiums after filing a claim. B. Provision of a fixed benefit irrespective of actual loss. C. Reimbursement up to the amount of actual financial loss suffered. D. Payment of twice the loss amount if total destruction occurs. The correct answer is C. The principle of indemnity ensures the insured is restored to their financial position before a loss without making a profit from the claim. Reason A is not correct. Indemnity does not require premium repayment after a loss. Reason B is not correct. That describes a valued contract, not indemnity, which limits payment to actual loss. Reason D is not correct. Indemnity prohibits overpayment such as double compensation. Question 47. In insurance terminology, which distinction correctly differentiates risk from peril? A. Risk denotes a hazard that increases severity, while peril denotes loss probability. B. Risk denotes the event causing damage, while peril denotes financial exposure. C. Risk denotes the premium paid for coverage, while peril denotes the insured property. D. Risk denotes the uncertainty of loss, while peril denotes the cause of loss. The correct answer is D. Risk refers to the chance that a loss may occur, whereas peril identifies the specific event or cause that leads to a loss. Reason A is not correct. Hazards differ from perils and do not define loss probability. Reason B is not correct. Peril is not a measure of financial exposure, but the event causing damage. Reason C is not correct. Risk is not the premium paid, nor is peril the property insured. Question 48. Which example illustrates a moral hazard rather than a physical hazard in insurance? A. Storing flammable liquids next to a heat source in a warehouse. B. A hailstorm causing dents in a vehicle's hood. C. An insured intentionally stages an accident to collect benefits. D. A dry tree hanging over a home increasing fire risk. The correct answer is C. Moral hazard arises from dishonesty or increased risk of unethical behavior, such as intentionally creating a loss to obtain insurance proceeds. Reason A is not correct. That is a physical hazard because it increases likelihood of loss by condition. Reason B is not correct. A hailstorm is a peril and physical in nature, not moral. Reason D is not correct. A tree increases risk conditionally, so it's a physical hazard. Question 49. Which statement best applies the law of large numbers to insurance operations? A. Premiums are fixed regardless of the size of the risk pool. B. Insurers must limit policy sales to a small group for reliable forecasts. C. Predicting loss frequency becomes more accurate as the number of insured units increases. D. Loss payments are always identical for every insured risk. The correct answer is C. The law of large numbers states that as exposure count grows, actual loss experience will more closely align with predicted average losses. Reason A is not correct. Premiums vary with pool size. They are not fixed under this principle. Reason B is not correct. Smaller groups reduce predictive accuracy, contrary to the law. Reason D is not correct. Loss payments differ by claim. They are not uniform. Question 50. Which strategy is used to mitigate adverse selection in insurance underwriting? A. Eliminating medical examinations for all policy applicants. B. Allowing unrestricted entry for high-risk applicants at standard rates. C. Implementing detailed applicant risk classifications and corresponding premium adjustments. D. Offering uniform coverage limits regardless of individual risk. The correct answer is C. Adverse selection is controlled by classifying applicants by risk and adjusting premiums or coverage to align with their risk profile. Reason A is not correct. Removing exams prevents accurate risk assessment and increases adverse selection. Reason B is not correct. Unrestricted entry at standard rates worsens adverse selection. Reason D is not correct. Uniform limits ignore risk differences, exacerbating adverse selection. Question 51. After signing a purchase agreement to buy a home, Laura scheduled closing for a month later. 2 weeks before closing, a fire destroys the property. Under the principle of insurable interest timing and property insurance, which statement best describes Laura's coverage rights? A. Both Laura and the seller may each recover a portion of the loss under their respective interests. B. The seller has exclusive right to recover because legal title remained with them when the fire occurred. C. Neither party may recover because legal title had not yet transferred to Laura at the time of loss. D. Laura can claim the loss because her equitable interest under the purchase contract gives her insurable interest at the time of loss. The correct answer is D. The correct answer is that a purchaser's equitable interest under an executed purchase contract constitutes insurable interest at the time of loss, entitling recovery. Reason A is not correct. Only the party with the equitable interest at the time of loss may recover. The seller cannot share in that recovery. Reason B is not correct. The seller's retention of legal title does not override the buyer's equitable interest once a binding contract exists. Reason C is not correct. Equitable interest created by the contract is sufficient for insurable interest even before legal title transfers. Question 52. Evan applies for homeowners insurance and does not disclose that he operates a home-based jewelry business. 6 months later, he files a claim for stolen jewelry. Under the doctrine of utmost good faith, which action may the insurer take? A. Issue a partial payout based on the declared personal property limits. B. Pay the claim, but impose a higher premium at renewal for the nondisclosure. C. Limit coverage to standard homeowner perils, excluding theft of jewelry. D. Void the policy from inception due to material misrepresentation on the application. The correct answer is D. The correct answer is that a material misrepresentation on the application allows the insurer to void the policy ab initio under the doctrine of utmost good faith. Reason A is not correct. Partial payout based on declared limits ignores the insurer's right to void the entire policy for material misstatement. Reason B is not correct. Adjusting the premium at renewal does not address the insurer's right to rescind for non-disclosure of a material fact. Reason C is not correct. Coverage limitations cannot be imposed after the fact when the policy may be void for misrepresentation. Question 53. Under the ISO standard fire policy, which of the following elements must appear on the declarations page? A. Insured's dwelling replacement cost value. B. Effective and expiration dates of the policy period. C. Specific percentage for coinsurance requirement. D. Detailed list of perils insured against. The correct answer is B. The declarations page lists essential policy information, such as the effective and expiration dates, which define the coverage period. Details like replacement costs, coinsurance percentages, and perils are found in the body of the policy or in endorsements, not on the declarations. Reason A is not correct. Replacement cost values are included in endorsement or coverage sections, not on the declarations page. Reason C is not correct. Coinsurance percentages are specified in the conditions section, not on declarations. Reason D is not correct. A detailed perils list belongs in the insuring agreement, not in the declarations. Question 54. In a standard indemnity insurance policy, the insuring agreement's promise to pay is best described as which of the following? A. Provide a legal defense for third-party claims against the insured. B. Reimburse the insured for covered losses up to the policy limit. C. Extend coverage to punitive damages awarded against the insured. D. Guarantee coverage for claims reported after policy expiration. The correct answer is B. The core promise in an indemnity policy's insuring agreement is to compensate the insured for covered losses up to the stated policy limit. Defense obligations, punitive damages, and extended reporting periods are separate or excluded provisions. Reason A is not correct. Duty to defend is a distinct obligation, not the promise to pay indemnity. Reason C is not correct. Punitive damages are typically excluded and not part of the indemnity promise. Reason D is not correct. Coverage for late reported claims requires a special reporting endorsement, not the basic promise. Question 55. The primary interpretive function of the definition section in a property and casualty policy is to A. Describe the insurer's financial rating and reserves. B. Establish the order of precedence among various policy clauses. C. Outline the insured's duties following a loss. D. Provide explicit meanings for italicized or bolded terms to reduce ambiguity. The correct answer is D. The definition section clarifies the specific meanings of policy terms wherever they appear, minimizing ambiguity. Clause order of precedence, post-loss duties, and insurer financial information are handled in other policy sections or external documents. Reason A is not correct. Insurer financial ratings are external and not part of policy definitions. Reason B is not correct. Clause precedence rules are found in general provisions, not definitions. Reason C is not correct. Post-loss obligations are detailed within the conditions section, not definitions. Question 56. Which of the following is a condition precedent to coverage under most property insurance policies? A. Paying the deductible amount before filing a claim. B. Promptly notifying the insurer of a covered loss and cooperating in its investigation. C. Initiating appraisal proceedings upon dispute over loss valuation. D. Including a mortgagee clause endorsement at policy inception. The correct answer is B. Prompt notice of loss and cooperation are required before coverage applies, serving as conditions precedent. Deductibles, appraisal, and mortgagee clauses are policy provisions, but are not prerequisites for initial coverage under a loss. Reason A is not correct. Deductibles affect claim settlement amounts, but are not preconditions for coverage eligibility. Reason C is not correct. Appraisal is a post-loss valuation process, not a precondition to coverage. Reason D is not correct. A mortgagee clause is an optional endorsement and not required before coverage. Question 57. A homeowner's HO. 3 policy includes an additional coverage for collapse, which replaces the standard collapse exclusion. Under this collapse provision, coverage applies only if collapse is caused by specific perils listed: hidden decay, insect damage, weight of ice, snow or sleet, or defective materials. The roof collapsed after termite infestation weakened the rafters and heavy snowfall accumulated. Under the terms of this policy, how will the insurer respond to the claim for roof collapse? A. Pay the claim in full because insect damage is a listed peril under the collapse coverage. B. Deny the claim because collapse resulting from termite damage is excluded under the policy. C. Offer partial payment for snow load but deny the portion attributable to hidden decay. D. Deny the claim because collapse must occur suddenly and gradual termite damage does not qualify. The correct answer is A. The collapse provision specifically covers collapse caused by insect damage, and termite infestation is classified as insect damage, so the insurer must pay for the entire collapse loss. Reason B is not correct. This is incorrect because insect damage is explicitly listed as a covered cause, not excluded. Reason C is not correct. This is incorrect because coverage applies to the entire collapse event when any listed peril contributes, not apportioned. Reason D is not correct. This is incorrect because the provision does not require sudden collapse. It covers the listed perils regardless of collapse speed. Question 58. A homeowner's HO. 3 policy excludes freezing of plumbing systems. The insured purchased a limited freeze damage endorsement that modifies this exclusion by covering freeze damage only if the insured maintains the thermostat at a minimum of 58 degrees Fahrenheit at all times. The insured left town, setting the thermostat to 55 degrees Fahrenheit to conserve energy, and the unheated pipes froze and ruptured. Under the endorsement, how will the insurer address the plumbing damage claim? A. Pay the claim because the endorsement supersedes the policy exclusion once purchased. B. Pay only if the insured can prove reasonable care was taken to prevent freezing. C. Deny the claim because the insured failed to meet the endorsement's required temperature condition. D. Deny the claim because freeze damage remains excluded even with the endorsement. The correct answer is C. The endorsement only applies when the insured maintains the specified minimum thermostat setting. Failure to meet that condition means the freeze exclusion remains in force and the loss is not covered. Reason A is not correct. This is incorrect because endorsement coverage is conditional and does not automatically override the exclusion without compliance. Reason B is not correct. This is incorrect because the endorsement does not include a reasonable care provision. It requires strict adherence to the temperature requirement. Reason D is not correct. This is incorrect because the endorsement can provide coverage if its condition is met, but here it was not. Question 59. Which method is most commonly used to calculate the actual cash value, ACV, of property in an insurance claim? A. Replacement cost minus salvage value. B. Replacement cost minus deductible. C. Market value plus depreciation. D. Replacement cost minus depreciation. The correct answer is D. The correct answer indicates that ACV is calculated by taking the replacement cost of the property and subtracting depreciation for age and wear, which matches standard insurance practice. Reason A is not correct. Salvage value is addressed after determining ACV and is not subtracted in its calculation. Reason B is not correct. Deductibles reduce the payout amount but are not part of the ACV formula itself. Reason C is not correct. Adding depreciation would overstate value, whereas ACV subtracts depreciation. Question 60. Under the replacement cost new for old principle, an insurer's payment is based on which type of valuation? A. Salvage value of existing materials. B. Actual cash value including depreciation. C. Fair market value determined in an open sale. D. Current cost to replace property without depreciation deduction. The correct answer is D. The correct answer reflects that the new for old principle pays the cost to replace property with new materials without deducting depreciation. Reason A is not correct. Salvage value applies after settlement and is not the basis of replacement cost payment. Reason B is not correct. Actual cash value includes depreciation, which contradicts the new for old principle. Reason C is not correct. Fair market value relates to sale price between willing parties, not replacement cost. Question 61. In property claim adjustments, depreciation tables are primarily used to determine which of the following? A. Fair market value at the time of loss. B. Current replacement cost of the item. C. Monetary deduction for age and wear. D. Salvage credit upon disposal. The correct answer is C. The correct answer identifies that depreciation tables guide adjusters in quantifying the deductible amount for physical deterioration due to age and wear. Reason A is not correct. Fair market value is based on sale conditions, not depreciation schedules. Reason B is not correct. Replacement cost is determined separately and does not use depreciation tables for calculation. Reason D is not correct. Salvage credit applies after depreciation and replacement cost are determined. Question 62. Which statement best distinguishes fair market value from actual cash value in property insurance? A. Actual cash value reflects the original purchase price. B. Actual cash value is determined exclusively by market demand. C. Fair market value subtracts depreciation from replacement cost. D. Fair market value represents the price agreed upon by a willing buyer and seller. The correct answer is D. The correct answer explains that fair market value is the probable sale price between informed parties, whereas actual cash value applies depreciation to replacement cost. Reason A is not correct. Original purchase price is historical cost, not how ACV or fair market value are determined. Reason B is not correct. Market demand influences value, but ACV specifically involves replacement cost less depreciation. Reason C is not correct. Subtracting depreciation from replacement cost defines ACV, not fair market value. Question 63. Functional replacement cost valuation values a damaged structure based on which method? A. Cost to rebuild with identical original materials. B. Cost to replace using modern materials with equivalent utility. C. Historical purchase price adjusted for inflation. D. Fair market price of comparable nearby properties. The correct answer is B. The correct answer defines functional replacement cost as using current materials that perform the same function, rather than matching obsolete or original materials exactly. Reason A is not correct. Identical original materials refer to exact replacement cost, not the functional cost concept. Reason C is not correct. Historical price adjusted for inflation does not account for current utility or efficiency. Reason D is not correct. Fair market price is unrelated to the cost-based functional replacement approach. Question 64. A small commercial warehouse is insured with a $100,000 policy limit under a 75% coinsurance clause. The building's value is $200,000. If a covered loss causes $30,000 in damage, how much will the insurer pay after applying the coinsurance penalty? A. $30,000. B. $25,000. C. $20,000. D. $22,500. The correct answer is C. The required insurance is 75% of $200,000 or $150,000. Since the policy limit is $100,000, the penalty ratio is 100,000 divided by 150,000 equals 0.6667. So the insurer pays 0.6667 multiplied by $30,000 equals $20,000. Reason A is not correct. Assuming full payment with no coinsurance penalty ignores the effect of the coinsurance clause. Reason B is not correct. Dividing the loss by 1.2 instead of using the correct penalty ratio leads to an incorrect payment amount. Reason D is not correct. Multiplying the loss by the coinsurance percentage rather than the penalty ratio miscalculates the insurer's share. Question 65. During a severe windstorm, a homeowner's policy with a $2,500 per occurrence deductible covers damage to both the roof, $15,000, and siding, $8,000. How much will the insurer pay under this policy for the total loss? A. $20,500. B. $12,500. C. $18,000. D. $23,000. The correct answer is A. First sum, all covered damages, $15,000 plus $8,000 equals $23,000. Then subtract the single per occurrence deductible of $2,500 to arrive at a payment of $20,500. Reason B is not correct. Subtracting the deductible only from one damage component ignores the requirement to apply it to the total covered loss once per occurrence. Reason C is not correct. Applying the deductible separately to each damage component incorrectly uses it twice, reducing the payment too much. Reason D is not correct. Omitting the deductible entirely overstates the insurer's payment by failing to account for the policyholder's share. Question 66. In a standard property insurance declarations page, what is the correct order for listing named insureds? A. Individuals in alphabetical order by last name, then corporate entities by legal status. B. Named insureds listed in the chronological order they were added to the policy. C. Legal entities first, followed by individuals in alphabetical order by surname. D. Corporate entities and individuals intermingled in reverse alphabetical order. The correct answer is C. The correct answer is that legal entities appear first on the declarations, followed by individuals listed alphabetically by last name. Reason A is not correct. Individuals are never listed before corporate entities, so this ordering is incorrect. Reason B is not correct. The declarations page does not use the order in which insureds were added to determine listing sequence. Reason D is not correct. Reverse alphabetical order is not used for listing named insureds on the declarations. Question 67. Under a standard property policy, the policy period becomes effective at what exact time on the effective date? A. 12:01 a.m. Local time at the insured premises on the effective date. B. 12:01 a.m. Standard meridian time for the insurer's headquarters. C. 12 o'clock a.m. Midnight local time on the policy effective date. D. 12:01 a.m. Local time after a full 24-hour notice period. The correct answer is A. The correct answer is that coverage begins at 12:01 a.m. Local time at the insured premises on the effective date. Reason B is not correct. The start time is based on local time at the premises, not the insurer's headquarters meridian. Reason C is not correct. Coverage does not begin exactly at midnight, but at 1 minute after midnight. Reason D is not correct. No 24-hour notice period is required before the policy becomes effective. Question 68. If a mortgagee's interest is inaccurately described in the declarations of a standard mortgage clause, how does the insurer treat that error? A. The insurer treats the mortgagee as if correctly named and does not invalidate its interest. B. The insurer voids the mortgagee's coverage but honors the insured's coverage. C. The insurer refunds the mortgagee's portion of the premium and cancels its interest. D. The insurer rescinds the entire policy for misdescription of interest. The correct answer is A. The correct answer is that an inaccurate description of the mortgagee does not invalidate its interest. The insurer still treats the mortgagee as properly named. Reason B is not correct. Coverage for the insured remains unaffected, but the mortgagee's interest is not voided by misdescription. Reason C is not correct. There is no requirement to refund premium or cancel the mortgagee's interest for a misdescription. Reason D is not correct. The insurer does not rescind the entire policy due to an error in naming the mortgagee. Question 69. Under the duties after loss condition in a standard property insurance policy, notice of loss must be given promptly to which party to satisfy the prompt notice requirement? A. Only the insurer. B. Only the agent. C. Either the insurer or its authorized agent. D. The Department of Insurance. The correct answer is C. The correct answer is that the insured must give prompt notice to either the insurer or its authorized agent, which satisfies the duties after loss requirement. Other parties are not addressed by this condition. Reason A is not correct. Specifying only the insurer overlooks that notice to an authorized agent also satisfies the requirement. Reason B is not correct. Limiting notice to only the agent omits direct notice to the insurer itself, which is equally acceptable. Reason D is not correct. The Department of Insurance is not a recipient designated in the policy's duties after loss condition. Question 70. Under the conditions of an ISO property insurance policy, after the insurer requests a sworn proof of loss, within what period must the insured submit that proof of loss? A. 30 days. B. 60 days. C. 90 days. D. 180 days. The correct answer is B. Under ISO policy conditions, the insured is required to submit a sworn proof of loss within 60 days after the insurer's request. Other timeframes are not specified in this condition. Reason A is not correct. A 30-day requirement is not specified in the standard proof of loss condition. Reason C is not correct. A 90-day period exceeds the timeframe established by the ISO model conditions. Reason D is not correct. A 180-day period is longer than the condition stipulates and is not referenced. Question 71. Which statement accurately describes the application of the abandonment clause in a standard property insurance policy? A. The insured may abandon damaged property to the insurer for salvage. B. The insured cannot abandon property to the insurer. C. The insurer may require abandonment of unsalvageable property. D. Abandonment is permitted only with the insurer's written consent. The correct answer is B. The abandonment clause prohibits the insured from relinquishing property to the insurer. The policy disallows transfer of title regardless of the condition of the property. Reason A is not correct. Although abandonment for salvage may seem logical, the clause explicitly prohibits any abandonment to the insurer. Reason C is not correct. The insurer cannot compel abandonment of property under this clause. The insured simply loses coverage if property is abandoned. Reason D is not correct. No provision allows abandonment even with written consent. The clause prohibits abandonment outright. Question 72. A homeowner submits a written demand for appraisal under their standard property policy after an insurer dispute. According to the policy's appraisal process, within how many days must both the homeowner and the insurer each notify the other of their selected appraiser? A. 10 days. B. 15 days. C. 20 days. D. 30 days. The correct answer is C. The policy requires each party to select and notify the other of their appraiser within 20 days of the written demand, ensuring a timely appraisal process. Reason A is not correct. This interval is shorter than the policy's specified 20-day notification period. Reason B is not correct. The policy allows more time than 15 days for appraiser selection notification. Reason D is not correct. This duration exceeds the policy's 20-day requirement for notifying appraiser selection. Question 73. Under a standard fire policy's earth movement exclusion, which of the following losses remains covered? A. Loss caused by an earthquake. B. Loss resulting from a volcanic eruption. C. Loss from collapse of a building wall due to hidden decay. D. Loss due to a sudden sinkhole collapse. The correct answer is C. This option is correct because the earth movement exclusion excludes perils such as earthquake, volcanic action, and sinkholes, but coverage for collapse due to hidden decay falls under the collapse coverage extension, thus remains covered. Reason A is not correct. Earthquake is one of the perils explicitly excluded by the earth movement exclusion. Reason B is not correct. Volcanic eruptions are expressly excluded under the earth movement exclusion. Reason D is not correct. Sudden sinkhole collapse is considered an earth movement peril and is excluded. Question 74. Which of the following is classified as a flood under the standard ISO property flood exclusion? A. Water damage from a malfunctioning sprinkler head. B. Overflow of a nearby river onto the insured premises. C. Backup of water from a municipal sewer line. D. Seepage of groundwater through foundation cracks. The correct answer is B. This option is correct because the flood exclusion defines flood as the general accumulation or overflow of water from natural sources including rivers, and excludes such damage, whereas the other perils are covered or excluded under different provisions. Reason A is not correct. Water from a malfunctioning sprinkler is considered a fire protection system discharge, not a flood. Reason C is not correct. Sewer backup is excluded under a separate sewer backup exclusion, not the flood exclusion. Reason D is not correct. Groundwater seepage is excluded under a separate water damage provision, not under the flood definition. Question 75. A homeowner's policyholder submits a claim after their residence and personal belongings are contaminated by radioactive particles released during a nearby nuclear power plant accident. The policy includes both a war and a nuclear hazard exclusion. Under the terms of the standard policy, how will the insurer respond to this claim? A. Coverage applies because the nuclear hazard exclusion only pertains to weapons-related incidents. B. The claim is excluded due to the nuclear hazard exclusion, regardless of any war exclusion provisions. C. Coverage is available if the insured purchased a separate nuclear contamination endorsement. D. The claim is excluded under the war exclusion, which also bars nuclear reactor accidents. The correct answer is B. The nuclear hazard exclusion expressly bars coverage for loss caused directly or indirectly by nuclear reaction, radiation, or radioactive contamination, irrespective of war peril provisions. Reason A is not correct. The nuclear hazard exclusion is not limited to weapons-related events but includes reactor accidents and radioactive contamination. Reason C is not correct. A separate endorsement would be required for coverage, but the question pertains to the standard policy terms without that endorsement. Reason D is not correct. The war exclusion does not address civilian nuclear accidents. Reactor-related losses fall under the nuclear hazard exclusion instead. Question 76. According to Texas Insurance Code Section 31.002, what rulemaking authority does the Commissioner possess? A. Adopt rules necessary to implement any provision of the insurance code. B. Approve rate filings submitted by insurers in the Texas market. C. Investigate consumer complaints regarding claim delays. D. Levy administrative penalties against unlicensed adjusters. The correct answer is A. The Commissioner is empowered under Section 31.002 to adopt rules needed to carry out and enforce all provisions of the insurance code, ensuring comprehensive implementation authority. Reason B is not correct. Approving rate filings is governed by separate provisions addressing rate regulation, not the general rulemaking authority in Section 31.002. Reason C is not correct. Investigating consumer complaints is an enforcement activity, but not the broad rulemaking power granted in Section 31.002. Reason D is not correct. Levying penalties is an enforcement sanction, whereas Section 31.002 specifically concerns rule adoption authority. Question 77. Under Texas Insurance Code Section 83.051, which procedural requirement must the Commissioner satisfy before issuing a cease and desist order? A. Provide notice and opportunity for a hearing under the Administrative Procedure Act. B. Complete a market conduct examination into insurer solvency. C. Publish the proposed order on the Department's website for 30 days. D. Obtain a voluntary compliance agreement from the respondent. The correct answer is A. Section 83.051 mandates that the Commissioner must issue a cease and desist order only after giving the respondent notice and an opportunity for hearing in accordance with the Administrative Procedure Act. Reason B is not correct. A market conduct exam is a separate investigative tool and not a prerequisite for issuing a cease and desist order under Section 83.051. Reason C is not correct. Publishing the order online is not mandated by Section 83.051, which focuses on notice to the respondent and a hearing. Reason D is not correct. A voluntary agreement may resolve violations but is not required prior to issuing a cease and desist order under the statute. Question 78. For an emergency cease and desist order under Texas Insurance Code, what finding must the Commissioner make regarding the conduct at issue? A. It poses a substantial threat of immediate and irreparable injury to the public. B. It has caused significant financial loss to multiple insurers. C. It violates federal insurance statutes. D. It exposes the department to potential litigation. The correct answer is A. The statutory emergency cease and desist provision requires the Commissioner to find that the conduct creates a substantial threat of immediate, irreparable harm to the public interest before issuing an emergency order. Reason B is not correct. Economic losses to insurers do not meet the emergency public harm threshold specified for emergency orders. Reason C is not correct. Violations of federal law are not the standard for state emergency cease and desist orders under Texas Insurance Code. Reason D is not correct. Possible department litigation exposure is unrelated to the public harm requirement for emergency orders. Question 79. A public insurance adjuster has repeatedly failed to maintain required client records, prompting the Texas Department of Insurance to assess an administrative penalty under Section 84.022. What is the maximum penalty per violation the Commissioner may impose? A. $1,000. B. $5,000. C. $10,000. D. $2,500. The correct answer is B. The correct answer is that the Commissioner may impose a maximum penalty of $5,000 per violation. Section 84.022 of the Texas Public Adjuster Act sets this statutory cap. Reason A is not correct. A $1,000 penalty is below the statutory maximum set by the statute. Reason C is not correct. A $10,000 penalty exceeds the limit established in the statute. Reason D is not correct. A $2,500 penalty understates the maximum amount authorized by law. Question 80. The Texas Department of Insurance plans a scheduled review of a public adjuster's claim files and intends to notify the adjuster under record examination scheduling requirements. What is the minimum number of days advance written notice the department must provide? A. 5 days. B. 10 days. C. 15 days. D. 30 days. The correct answer is B. The correct answer is 10 days. Under the record examination scheduling rules, the department must give at least 10 days written notice before commencing an on-site review. Reason A is not correct. 5 days notice is shorter than the required minimum period. Reason C is not correct. 15 days exceeds the minimum requirement, but is not the statutory floor. Reason D is not correct. 30 days is well beyond the minimum notice period required by regulation. Question 81. During a market conduct examination of a public insurance adjusting firm by the Texas Department of Insurance, examiners request several documents. Which of the following requests falls within the legal scope of such an examination? A. A client's personal income tax returns. B. The firm's marketing brochures for public adjusters. C. The adjuster's personal cell phone logs unrelated to cases. D. Receipts for private office decor purchases. The correct answer is B. The correct answer is that marketing brochures fall within the scope. Market conduct exams cover business practices like marketing, underwriting, and claims handling, not personal or unrelated records. Reason A is not correct. Personal tax returns are outside the scope focused on insurance transactions. Reason C is not correct. Personal cell phone logs unrelated to insurance work are not examinable. Reason D is not correct. Office decor receipts do not relate to insurance business practices. Question 82. Under the Texas Insurance Code, what is the minimum age requirement for an individual to be eligible to obtain a public adjuster license? A. 18 years old. B. 16 years old. C. 21 years old. D. 25 years old. The correct answer is A. The Texas Insurance Code specifies that public adjuster applicants must be at least 18 years of age to ensure they have reached legal adulthood. Reason B is not correct. 16 is below the statutory age requirement for public adjusters in Texas. Reason C is not correct. 21 exceeds the minimum age mandated by the Texas Insurance Code. Reason D is not correct. 25 is higher than the age specified in the statute. Question 83. Per Texas Insurance Code requirements, A public adjuster must submit a surety bond in which amount when applying for a license? A. $10,000. B. $5,000. C. $20,000. D. $25,000. The correct answer is A. Texas law mandates that public adjuster applicants provide a $10,000 surety bond to protect claimants against negligent or dishonest acts. Reason B is not correct. A $5,000 bond is insufficient per statute. Reason C is not correct. $20,000 exceeds the amount required by law. Reason D is not correct. $25,000 is higher than the statutory requirement. Question 84. Which vendor is authorized by the Texas Department of Insurance for processing fingerprint submissions of public adjuster license applicants? A. Morphotrust USA. B. Saffron Identity. C. Fingerprint Plus. D. Identigo. The correct answer is D. Texas requires public adjuster applicants to submit fingerprints through Identigo, the vendor contracted by the Department of Insurance for background checks. Reason A is not correct. Morphotrust USA is not the vendor contracted by the Texas Department of Insurance for this purpose. Reason B is not correct. Saffron Identity is not the authorized fingerprint processor for public adjusters in Texas. Reason C is not correct. Fingerprint Plus is not recognized by the Department of Insurance for these submissions. Question 85. According to Texas statutes, a public adjuster license remains valid for what renewal cycle length? A. 1 year. B. 3 years. C. 2 years. D. 5 years. The correct answer is C. Under Texas rules, public adjuster licenses are issued on a 2-year cycle, after which renewal is required to maintain licensure. Reason A is not correct. A 1-year term is shorter than the statutory cycle. Reason B is not correct. A 3-year term exceeds the 2-year period defined by law. Reason D is not correct. A 5-year term is longer than the period authorized by statute. Question 86. A public insurance adjuster has completed 14 of the required 24 continuing education hours midway through the current biennial period. How many additional hours must be completed by the end of the period to meet Texas requirements? A. 12 hours. B. 10 hours. C. 14 hours. D. 16 hours. The correct answer is B. The correct answer is 10 hours because the total CE required is 24 hours over 2 years, so 24 minus 14 equals 10. Reason A is not correct. Misinterprets the requirement as 12 hours per year instead of 24 over 2 years. Reason C is not correct. Duplicates hours already completed rather than calculating remaining hours. Reason D is not correct. Exceeds the total requirement and is unnecessary to meet the 24-hour mandate. Question 87. During the same biennial CE cycle, a licensed adjuster has completed 22 hours of general education and 1 hour of ethics education. How many additional ethics CE hours must the adjuster complete to satisfy the minimum ethics requirement? A. 2 hours. B. 0 hours. C. 1 hour. D. 3 hours. The correct answer is C. The correct answer is 1 hour because Texas requires a minimum of 2 ethics hours, and 1 has already been completed. Reason A is not correct. Overestimates the remaining need by doubling the required minimum instead of subtracting completed hours. Reason B is not correct. Assumes the requirement is already met despite only 1 ethics hour completed. Reason D is not correct. Exceeds the minimum required ethics hours and is not mandatory. Question 88. A public insurance adjuster allowed their license to expire 95 days ago and now seeks renewal. According to Texas statutes, which procedure must be followed to obtain licensure? A. Pay the late renewal penalty and submit a renewal application. B. Submit a new license application and pass the required examination. C. Request reinstatement through the department with proof of CE hours. D. Petition the commissioner for an extension before renewing the license. The correct answer is B. The correct answer is to submit a new license application and pass the examination because renewal is not permitted after the 90-day grace period. Reason A is not correct. Applies only within the 90-day grace period, which has already passed. Reason C is not correct. There is no reinstatement process after the grace period. A new application is required. Reason D is not correct. Extensions are not granted for late renewals under Texas law. Question 89. Under Texas Insurance Code Section 542.058, after receiving a valid proof of loss, an insurer must pay or deny an undisputed claim within how many days to avoid constituting an unfair claim settlement practice? A. 30 days. B. 45 days. C. 60 days. D. 90 days. The correct answer is C. The code requires insurers to pay or deny an undisputed claim within 60 days of receiving all required proofs of loss. Failure to do so is an unfair claim settlement practice under Chapter 542. Reason A is not correct. A 30-day period understates the statutory requirement for undisputed claims. Reason B is not correct. A 45-day period is shorter than the 60-day deadline specified in the code. Reason D is not correct. A 90-day period exceeds the maximum time frame allowed by the statute. Question 90. Under Texas Insurance Code Section 541.061, which act constitutes a misrepresentation of policy provisions? A. Asserting an individual's status as a public adjuster without a license. B. Providing a comparison that selectively omits unfavorable terms. C. Quoting premium rates exactly as filed with the department. D. Explaining all exclusions and conditions contained in the policy. The correct answer is B. Incomplete or ambiguous comparisons that omit unfavorable policy provisions are defined as misrepresentations under Section 541.061 of the Insurance Code. Reason A is not correct. Misstating adjuster status pertains to licensing issues, not policy provision misrepresentation. Reason C is not correct. Accurately quoting filed premium rates does not mislead about policy provisions. Reason D is not correct. Fully explaining exclusions is a transparent disclosure, not a misrepresentation. Question 91. According to Texas Insurance Code, Chapter 541, false advertising of insurance products is defined as any written or printed statement that is A. Distributed solely to existing policyholders about coverage changes. B. False, deceptive, or misleading regarding any aspect of an insurance policy. C. Included in department-approved rate filings. D. Presented by a licensed adjuster in a timely claim communication. The correct answer is B. Chapter 541 prohibits any false, deceptive, or misleading written or printed statements about insurance policies as false advertising. Reason A is not correct. Communications to existing policyholders about coverage changes are permissible notifications, not advertising. Reason C is not correct. Rate filings are regulatory submissions and not classified as advertising. Reason D is not correct. Claim communications by a licensed adjuster are not categorized as advertising under the statute. Question 92. During a networking event, a public adjuster tells attendees that any adjuster collaborating with a specific competitor will be blacklisted from future claim referrals and denied access to the adjuster's client base. Under Texas Insurance Code's boycott, coercion, and intimidation provisions, this practice is prohibited as which type of conduct? A. Misrepresentation of policy benefits. B. Boycott of the competitor through collective refusal to deal. C. Intimidation by threat of exclusion. D. Coercion through undue influence. The correct answer is C. This conduct falls under intimidation, as it uses threats of exclusion from future business to influence other adjusters, which is prohibited under the boycott, coercion, and intimidation provisions of the Texas Insurance Code. Reason A is not correct. This is not misrepresentation since no false policy terms were conveyed. Reason B is not correct. A boycott requires a group refusal to deal rather than threats to individual firms. Reason D is not correct. Coercion implies improper pressure, but the explicit threat of blacklisting specifically constitutes intimidation. Question 93. A public adjuster accepts a referral fee from an insurer and then offers the policyholder a complimentary home inspection if they purchase a policy with that insurer. Under Section 541.056 of the Texas Insurance Code, which is true about this arrangement? A. It constitutes an impermissible rebate or inducement. B. It qualifies as a permissible business expense. C. It is allowable if approved in writing by the commissioner. D. It is exempt when fully disclosed in the insurance contract. The correct answer is A. Offering a free inspection in exchange for purchasing coverage constitutes a rebate or inducement, which Section 541.056 expressly prohibits, regardless of referral fees received or disclosures made. Reason B is not correct. Such promotional costs are not classified as ordinary business expenses under this provision. Reason C is not correct. No written approval by the commissioner can legitimize a rebate prohibited by statute. Reason D is not correct. Disclosure in the contract does not convert an illegal rebate into a permissible practice. Question 94. While negotiating a claim adjustment, a public adjuster tells an insured that other adjusting firms lack expertise in storm-related losses and that their policies often conceal critical exclusions. Which aspect of this behavior constitutes an impermissible disparagement of competitors' products under Texas law? A. Emphasizing personal expertise over peers. B. Expressing an unverified opinion about market practices. C. Making unsubstantiated statements about competitor policy exclusions. D. Offering comparative analysis of coverage terms. The correct answer is C. Disparagement involves knowingly making false or unsubstantiated statements about a competitor's products or services. Claiming hidden exclusions without proof meets this definition under Texas law. Reason A is not correct. Highlighting one's own expertise does not necessarily disparage competitors. Reason B is not correct. Expressing opinion is permissible unless presented as fact without basis. Reason D is not correct. Offering factual comparisons is allowed if complete and accurate. Question 95. Under Chapter 4102 of the Texas Insurance Code, at what point must a public adjuster provide the insured with a written contract to comply with statutory requirements? A. At the time the claim investigation is completed. B. Within 5 business days after the first face-to-face meeting. C. Prior to commencing any services on the claim. D. Upon submitting the proof of loss to the insurer. The correct answer is C. The Texas Insurance Code mandates that a public adjuster deliver a written contract to the insured before performing any adjusting services to ensure clear understanding of duties and compensation. Reason A is not correct. Waiting until claim investigation ends fails to protect the insured before services begin. Reason B is not correct. No provision establishes a 5 business day delay after a meeting for contract delivery. Reason D is not correct. Delivering the contract upon proof of loss submission occurs after services have begun. Question 96. Under Texas law, after entering into a contract with a public adjuster, the insured has the unconditional right to rescind the agreement within how many hours? A. 24 hours. B. 120 hours. C. 96 hours. D. 72 hours. The correct answer is D. Texas statutes grant the insured a 72-hour cooling-off period, during which the public adjuster contract may be rescinded without penalty or obligation. Reason A is not correct. A 24-hour period is shorter than the statute's mandated cool-down window. Reason B is not correct. The law does not authorize a 5-day rescission period for adjuster contracts. Reason C is not correct. No Texas provision extends the rescission right to 96 hours. Question 97. According to the Texas Insurance Code, a public adjuster's contract must conspicuously state compensation in which form? A. As a flat fee plus expenses. B. An hourly rate based on time spent. C. A percentage of the insurance recovery. D. A combination of hourly fees and percentage. The correct answer is C. Texas law requires public adjuster contracts to specify compensation as a percentage of the amount recovered from the insurer, ensuring transparency of contingency fees. Reason A is not correct. Flat fees are not authorized. The statute requires percentage-based compensation. Reason B is not correct. Hourly rates do not satisfy the statutory requirement for contingency compensation. Reason D is not correct. Combining hourly and percentage methods conflicts with the required single-form disclosure. Question 98. While handling a client's flood damage claim, a public insurance adjuster directly negotiates with a third-party auto insurer to settle property damage liability on the insured's behalf. Under Texas statutes governing public adjusters, which action violates the prohibition on negotiating third-party liability claims? A. Contacting the third-party insurer to verify whether liability coverage applies. B. Negotiating the property damage settlement with the insured's own insurer. C. Requesting documentation from the at-fault party's insurer to support subrogation efforts. D. Directly negotiating settlement terms with a third-party auto liability insurer. The correct answer is D. This option is correct because Texas law explicitly prohibits a public insurance adjuster from negotiating with a third-party liability insurer on behalf of an insured. All other actions involve fact-finding tasks or dealings with the insured's own insurer, which are permitted. Reason A is not correct. Verifying whether liability coverage applies is a fact-finding step and is allowed under Texas statutes. Reason B is not correct. Negotiating with the insured's own insurer pertains to first-party claims and is not prohibited. Reason C is not correct. Requesting subrogation documentation is part of adjusting duties and does not constitute negotiating a settlement. Question 99. A public insurance adjuster is advising an insured after severe hail damage to their home. The insurer offers an expedient yet low settlement that barely covers essential repairs. Which action best demonstrates the adjuster's duty to act in the insured's best interest? Fiduciary duty. A. Advising the insured on their right to submit additional documentation and pursue a higher settlement. B. Recommending acceptance of the insurer's low settlement to expedite repairs. C. Referring the insured to a contractor who pays a referral fee to the adjuster. D. Negotiating a release with the insurer that limits future reimbursement claims. The correct answer is A. This option is correct because acting in the insured's best interest requires informing them of all available options, including gathering more documentation to seek fair compensation rather than simply accepting a deficient offer. Reason B is not correct. Prioritizing speed over adequate coverage does not fulfill fiduciary duty. Reason C is not correct. Choosing a contractor for referral fees creates a conflict rather than serving the insured. Reason D is not correct. Limiting future claims through a release undermines the insured's right to full recovery. Question 100. A public insurance adjuster refers an insured to a repair firm in which the adjuster holds a financial interest. Under Texas rules, what must the adjuster do regarding this relationship? A. Disclose the financial interest to the insurer before recommending the firm. B. Obtain written acknowledgement from the insured after repairs are completed. C. Provide an oral disclosure of the financial interest at the initial consultation. D. Disclose the financial interest in writing to the insured before any referral. The correct answer is D. This option is correct because Texas regulations require the adjuster to provide written notice of any financial interest in a repair firm to the insured before making a referral, ensuring transparency and avoiding conflicts of interest. Reason A is not correct. Disclosure must be made to the insured, not the insurer, under Texas regulations. Reason B is not correct. Acknowledgement after repairs is too late. Disclosure must occur before referral. Reason C is not correct. Oral disclosure alone isn't sufficient. The statute specifies written notification. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.